We begin, though, with our talk of the tape. Today's rally and the resiliency of this market despite a series of serious risks. Can stocks find some traction for an end-of-year rally? Let's ask Adam Parker. He's the CEO and founder of Trivariate Research, right here next to me at Post 9. A big week. We had a big move today. Is this all about positioning ahead of the midterms or something more than that?
I think so. I think it's that. I think there's an emerging narrative that maybe the economy is going to slow at maybe a pretty slow pace and not a fast one, and maybe corporate earnings can be okay.
Oh, soft landing? Is that where you're going?
That narrative is picking up for sure. You know, my case for a while has been it'll be a slow decline, maybe even 24, not even above 23, just sort of a shallow type of trough, and then maybe you can find either cyclicals that are too cheap or growth companies that power through, and I feel like there's lots of things to buy where I can beat the market, so I'm feeling good about.
Wow, I feel like this is a changed man.
No, it's the same research that we've been publishing. Cheap cyclicals that don't have inventory, where expectations are low, you can buy those. Energy, metals.
Yeah, I know, but your broader sort of market commentary sounds a little more positive than you've been, right? You were making the case for weeks, if not months. Earnings are way too high.
That's a really important point. June of this year, earnings expectations for 2023 were $252. You know what they are now? $231. Now earnings expectations are only for 4% growth this year. They're not as outrageously high as they were. So things have changed in the last few months. Obviously, when data change, you have to absorb that and react. I don't think the market's, ridiculously expensive at 16.3 times those forward earnings numbers. But I think the numbers will gradually come down. I think the real thing will be, is 2024 actually above 23 or not? And so I better buy things that don't have inventory impediment or have margin expansion so I can beat the market. So I'm not, bulled up. It's the same thing I told you a couple weeks ago.
I'm not saying you're bulled up, but you're certainly incrementally more positive than you've been. I mean, you sound it.
Listen, I don't know here if the next move is down 10% or up 10%. And so I don't like to be bullish when that's the environment. When I come on here, I'm like, hey, last 10 years mostly bullish. I think it's 30% up 10% now. I know it's kind of 10-10. We're 3,800. You sure it's 4,200 before it's 3420? I'm not so sure.
Well, I mean, some are suggesting it's for, there was a note today, I think it was UBS, who said 42 before 4,900 on the S&P, 4,200 before 4,900, where it's like 48.
Isn't that by definition true? It's got to get to if it's going way higher, it's got to go a little higher before it goes way higher? Okay.
No, they're suggesting that it goes lower.
Oh, before 39.
I mean, I'm sorry, 32 before 39. Forgive me, I misspoke.
All right.
I misspoke.
All right, I got you.
Thank
well,
you.
Sometimes there's a double breaking putt and sometimes there's a straight putt, so I don't know what these guys are saying, but that's possible. I mean, I think right now this is short term around the midterm election, thinking there'll be a little bit less restricted policy and, people optimistic about that. As you know, the politics always have a short-term impact on the market. Longer-term corporate profits, margins, the bond and, interest rates, et cetera. As we've talked about every week, and I wasn't on last week, the Fed's going to stay hawkish, man. So I know every couple of weeks we like to, have unicorns and lollipops and, dovishness in the air, but they're going to stay hawkish for a lot longer than people think because they have to really snuff out inflation.
So that sets the stage for CPI.
Yeah.
CPI trumps midterms?
For sure. Yeah.
What do we need to see for CPI for this rally to get any sort of footing, if you want to use that word?
I don't know what the number. I think you have to believe that we're on a path towards something like 5 or less by the middle of next year. I mean, I think that's what you really have to believe, and there's just not a lot of evidence supporting that in the broader market, right? You still have rents that are, oh my God, now they're not growing at 1, they're flat. Well, you still have 11, 12 times up 1. I mean, rents, it's going to take a while for that to trickle through. Obviously,
sure, yes, it's going to take a while to get to the finish line of inflation coming down, but it doesn't seem like you need all that much to get people more positive on the market as long as they believe that the trend is going in the right direction. And we've been fooled many times thinking that until the CPI came out and said, maybe it's not
I think
peaking.
The Fed was pretty clear. I think the Fed, they've been very clear. We need much lower inflation trends to get dovish. I mean, it's pretty obvious. So I'm not going to be fooled to believe in some dovish dream in the near term. So I have to find things that can earn enough, generate enough free cash flow in the interim to be good stocks.
So the market has proven, at least lately, its ability to go up without tech participating as it used to. Is that a sea change in the way we need to think about? Is value really overtaking growth or not?
I think there's a very good argument for that. I don't think tech. Look, tech's 25% of the S&P 500, so you can't have 25 go down a ton and everything be rosy. But I don't think tech has to be the leader. And we wrote a couple months back. I think we talked about it once or twice. I think it's interesting to think through what the new leadership sector could be. It's usually something different each major cycle, and our view is maybe it's healthcare this cycle, right? That you have a lot of demand growth exceeding supply growth, whether it's in services. You could maybe have some innovation in biotech. You could maybe have pharma look a lot more attractive than staples. So I think it could be interesting to see if healthcare is the leadership sector, over the next couple of years.